freedom of trading on mobile, Geojit BNP Paribas presents Flip Me, the award-winning new generation mobile trading platform. Now make informed investment decisions wherever you are. Geojit BNP Paribas.
Now let us look at the prospects for the stock market investors in the coming days. The performance of the Indian stock market will be substantially influenced by the developments in the global stock markets. We are presently having a situation of coupling in the global stock markets. So the global trends will influence the market trends in India also. The biggest positive for the global stock markets presently is the amending of the US economy and the excellent performance of the US corporate sector. US corporate sector is in the pink of health, and therefore the US stock market indices are very strong now. A major concern is the stock market performance in Europe. In Europe, of course, as I mentioned earlier, the European economy will be in recession, but a major fear from the market perspective was a contagion in Europe, a default by a pig's country, a disruptive default leading to a banking contagion and a major financial crisis which can spread to other markets of the world. To a large extent, this fear of a contagion has been contained. That problem is not likely to occur because the European Central Bank has moved. The European lenders to the sovereign bonds have taken a haircut on the loans which they have given, and also the European Central Bank has announced the LTRO, long-term repurchase options, whereby they have injected liquidity into the financial markets, and therefore there is no possibility of a banking crisis and a financial contagion in Europe. It is this containment of the financial crisis and the preempting of a financial contagion that has brought the phenomenon of risk on in 2012. In 2012, Jan and February, global markets have been performing well because of the return of risk appetite and the risk on that we are witnessing in the markets. If this risk on is replaced by risk off, again the markets will be experiencing problems. But then the present situation does not warrant a risk off immediately. There are two positives going for the global stock markets presently. One, as I mentioned, is the rebound in the US economic growth. US economic growth has not rebounded very strongly. Growth is not robust, but it is not fragile also. It is coming back. Unemployment continues to be high. That is an area of concern, but it has declined from 9.7 to 8.3, which is very positive. A major positive for the emerging market stock markets is the monetary easing that we are witnessing now. Central banks have been cutting interest rates. In the US, the Federal Reserve System is committed to keeping interest rates very low till the end of 2014. So the US Federal Chief Ben Bernanke has got on record that interest rates will continue to be very low till 2014. It's near 0%. In Japan also interest rates are near 0%. In Europe, interest rates are at historical lows. In emerging markets, interest rates have been hardening in 2011 because of inflationary concern. But the good news is that inflation has peaked in Asia. It peaked at 6.5%. Presently it is around 4.5%. That is why emerging market central banks have been easing monetary policy. Brazil, Thailand, Taiwan, India, Australia, all these economies have been cutting interest rates. So a low interest rate regime historically has been supportive of markets. This is the most important positive for the markets going forward. So if this situation continues and Europe continues to be stable, risk appetite will improve. This will facilitate more capital flows to emerging markets, and India will continue to do well. A major advantage for the Indian markets right now is a low level of valuation. Our PE multiple is now around 12.5 to 13. If you take the last 16 years, the average price earning multiple in India has been around 16. So Indian markets are now trading at a discount to the last 15-year average. For a country with the prospects for the Indian economy, 12 is a low level of valuation. 12.5 is a low level of valuation. And therefore, when things improve, certainly valuations will pick up and we can expect the market to improve. If you look at the market right now, you will know that the markets are reflecting the industrial and economic prospects. For example, the FMCG stocks are doing very well. Automobiles are doing very well. Banks are doing okay. So these are industries which are powered by domestic consumption. Domestic consumption is strong. That's why these industries are doing well, and the stock prices of these companies are performing very well. Some of them are at all-time highs. But if you look at the share prices of the telecom, mining companies, gas companies, etc., the prices are much lower than what they were 1 year ago. And this is reflecting the confusion regarding policies, the regulatory issues there. So the market is sending a signal that the problems are with policy issues and not with domestic consumption. We believe that the markets have already discounted the negatives as shown by the stock prices of various industries. Markets have to a large extent discounted the negatives. Of course, a 5% down risk is even now there in the markets, but there is also a 15% upside to the markets if economic situation comes back to normalcy, and the prospects for that also are good. So let us hope that the government will start acting on many areas on the policy front. Already there is a consensus building up on the goods and services tax. Let's hope the government will put its house in order, and there are some initiatives on the policy front. If that happens, we can expect an uptrend in the market. Long-term investors should utilize dips in the markets to buy quality stocks. Investors should always remember the fact that stocks outperform all other asset classes in the long run. In the present rather unfavorable situation, it may not be a good idea to chase stocks during rallies. Don't chase stocks during rallies. Instead, buy on dips. Buy on dips would be presently a good strategy going forward.
Experience the freedom of trading on mobile. Geojit BNP Paribas presents FlipMe, the award-winning new generation mobile trading platform. Now make informed investment decisions wherever you are. Geojit BNP Paribas.